Right. Okay. Doing a watch list then ahead of this jam-packed data on the US calendar. So please see my individual video that was on the US dollar, but I'm essentially looking for a move that's going to eye the lows down here or the highs up here. So we're in a potential setup for a short squeeze depending on the data. If the data comes in line with a faster growing economy in the US in comparison to elsewhere, then the dovish narrative at the Fed could well come under heat, and that could ignite a rally in the US dollar. And to the contrary, then we're looking down to the lows of last month and last week to break um, this week's lows, which we're currently coming into attack at the moment for a continuation to the downside. But I'm stacking myself up bullish purely on the day count, and I'm looking for the data to come in line with that bullish um, forecast. If I'm wrong, I'm wrong, and this is coming lower. If we go over to, we'll just stay on the currencies and we'll do the indexes as we get towards Wall Street, and we'll look at gold as well in this currencies division. Right, on the longer term charts, we have gold that has broken this level here and it's come up and broken this level here. This is regarded as a strong low from this area. On the upside, if we continue, therefore, in this movement, then we're coming up into this area here as a supply area. It could well continue higher within that. This week is currently inside of last week's. So until a break of this low or that low, we'll mark it on the chart. There is no bias on the weekly chart one way or the other than we've got longs in the market. So the bulls are in control. When I come into the daily chart, I'm looking at the trend and I'm asking myself, is this bullish trend broken? So we've got the swing low down here. So in my mind, until that is broken on the daily chart, we're still in a bull trend, and we can look for confluence in the Fibonacci, if that's your thing, by drawing a Fibonacci from, no, not down from there, bear with me, from the low of that impulse to the high, and note that we're coming into potentially a strong area of support. So we've got the 61.8 that's aligned with this supply area for an upside correction. So we're starting to see that upside correction already in play as of Wednesday, Thursday inside day, Friday starting to move up in line with the trend. That may well continue. If, on the other hand, we get a break of yesterday's inside day lows and accompanied by continued bearish price action, the behavior of price around that low and below the lows today, or even the opening price, which would be around there somewhere. And we'll look at that shortly. If we're getting the price reacting bearishly in here, then that leaves prospects of a downside continuation towards this critical level for a breakout to the downside, and technically leaving this this bullish trend now in the hands of the bears. If we look at the 4-hour market structure, we have this here as a potential resistance. It's already served its purpose as resistance, so it is proven resistance. And I can draw off that line, the low of that as a resistance line. So the bulls, sorry, need to get above that and stay above it in line with the bullish trend. We have support in this W formation's neckline. So this is a supporting area around yesterday's closing price, 185.80-ish. So this would be regarded as a supporting area for a continuation higher to break 1990 for confirmation that the bulls are staying with the buying program up in towards testing up high. Up into 1995 and through the psychological 2000 figure. On the flip side, a break below these levels, 1978 and 1975, 1976, again acting as a key level, then that downside argument, impulse correction, continuation to the downside will be intact to test, first of all, 1970, 1963, as per the confluence of the minus 272 and 78.6, right? So that is a confluence area for the target to the downside. We'll just mark that there. And we'll try and clean up the chart. I think as it's such an in-depth gold analysis, we'll leave it as a standalone analysis, and I'll be ending the video soon and we'll get into the currency shortly after. Right, so this is going to be quite a messy looking chart. I apologize for that. You'll have to bear with me. Right, so on the day count itself, well, first of all, we've got an ATR of around about $22. Okay, so that is the average range over the last 21 days of any given day. So there's plenty more to come from between 1983. We've only seen a few dollars so far. We started off the week up high, day one, day two, day three. We've got longs in the market here. All right, so we've made a new high for the week and we dropped day one, day two, and we're on day three. So no, we're not. We're back onto day, let me get this right, bear with me. Day one, day two. Yesterday was so this is, technically we're still in day two. This can go anywhere. But this was an inside day on day three. So it can't be part of the day count. So we've got day one shorts in the market. We had shorts in the market again. We've got this squeeze. So technically we're still day one. No, we're not, because we haven't broken yesterday's high either. So we are day one, day two. Well, this can go either way. So there is no day count to back us up other than we've got a peak formation over here, a peak formation over here, and we're sort of in no man's land. So depending on which side we break, if we break these highs, then technically we are in a day two continuation of day one, moving up on a day three of the week, Friday, Wednesday, Thursday, Friday, 1, 2, 3. Day three combined with a day two, while we're above that closing price, breaking yesterday's highs puts us in prospects of a, well, there it is, that green line, that trend line, of a continued short squeeze to test yesterday's highs. So we'll mark that, yesterday's high. It's pretty much already marked off, but Let's put it exact and get it on there. So that's yesterday's high. I've just popped 1991. All right. So for a move up, that is the bias in terms of the day count. But that's not to say it can. And we've got all the prospects drawn out for us on the downside for a downside capitulation of this attempt from the bulls to get back in control. All right, so those are the levels. Very extensive, comprehensive analysis. It can be used for the whole day. No need to continue updating this. Those are your levels on the downside. If we break below the closing price with momentum, bearish commitments, those are the levels to the downside. If, on the other hand, we break this cluster, well, let's just call it yesterday's highs, that's bulls showing the hand, they're staying in control, and we've got the upside targets as drawn with a psychological target of 2000. Okay, end of analysis for gold. And I'll now get on to the currencies.